What is going on? Welcome on into today's Power Hour stream. Hope you guys are doing well. It is Monday, April 17th here on this fine mid-April day, coming to you live from Austin, Texas. So we are looking right now at ExxonMobil. I'm looking at some of the oil stocks right now. We'll cover some of them a little bit deeper in a sec, because I was noticing some interesting stuff going on here, and it's kind of in the same trend that I've seen as of late. But I do want to mention there'll be a link below if you want to check out TradingView, which is the platform that we use to do all of our charting here on the channel. That'll be linked up down below, 30-day free trial. Also, if you want to check out Lux Algo and pair up those indicators on TradingView, that's also linked down below if you are interested. Okay, so the reason why I have this pulled up is because I jumped down to some oil futures that I was looking at, and essentially, they've been respecting some of these levels. I can get rid of some of them, but pretty key one was right here. Was the breakout zone, was the highs that we had got up to on the initial big gap up over the weekend a few weeks back with some of the oil news that we had. And then now we've kind of started to consolidate, rip up, and back test here. And actually, could be a false break to the upside here. I don't know. It doesn't look great, to be honest. Although it's still right in the middle of where it's been the past couple weeks between lows and highs. So not an interesting setup to me at all, like whatsoever. No interest. I don't care. But I do like to look at how this has been doing versus how some of the oil stocks have been doing versus how the market's been doing, so we can kind of get some comparisons. Like that's kind of the ultimate goal, right? So we'll see if we can do that. And that's the plan. So right now, this is crude oil futures on the 1 hour chart past couple of days. If you go back to, let's go look at ExxonMobil. ExxonMobil is kind of hanging out in this range. So it's on the low end of the range, but it's hanging out in this range. That's the bottom of the range pretty much, from like 114 up to like 117. So like a $3 range on ExxonMobil for the month of April so far. MRO, Marathon Oil, not so much. So Marathon had this big, here's essentially that gap up that we saw on crude. It's actually starting to back test that. This is the lowest level we've seen in the month of April on Marathon Oil, believe it or not. Oxy, Warren Buffett, right? This is essentially back testing the entire move that we had, almost, not all the way, almost the entire move that we had from the original gap up on oil. So they're back testing. ExxonMobil is the strongest, and it's not even close, and it's been that way for a while. But that's just something to keep in mind if you are looking and paying attention to some of the oil stuff and whatnot. So that's the deal in terms of some of the oil tickers. And I want to pull up the overall market here in just 1 second. Let's see. Boom, boom. Pin that. Okay, cool. So back to SPY. SPY is now green on the day. It was red. Now it's green. So yeah, we'll look at this 412 area. It was an area to watch. It's no longer one because we have not been respecting that 412 like at all. It doesn't really matter. The spot to watch is like 405. We talked 405.60. That's this guy down here. Lows of like 2 weeks ago. I think it was last Monday. Yeah, last Monday as well. So about a week ago, we were down there, 405, 406, and now we're up here. And what we've seen is that these breaks to the upside have been essentially all that's happening is we're just seeing a trend, right? We're just seeing the same patterns repeat like over and over and over. We're not necessarily seeing like SPY breaking out and going crazy, or the individual stocks. Sure, you can see more of that, but to be honest, we're not even seeing a ton of that there. It depends on where you're looking. You'll find some, but then you'll find others that are not, and it's like you're getting this kind of higher low pattern, which is fine, but now what do you expect here? If we did put in a higher low, which a bunch of hourly candles came down there. So looks like 411-ish, little north of 411, where we got a lot of those lows. And the lows of last week was 410, or on Friday was 410. So put in a higher low, about $1 higher, a little over $1 higher. And if this wants to continue, what would we look at for the next spot? We would ideally want to see this continue the trend structure and go above 415 up to 416 plus, if this is going to keep going this way. So we'll see until that breaks down. That's what we got, and that's what we're looking at. So chart wise, it doesn't look bad. It looks pretty decent, kind of rounding that corner and turning up. The question is going to be, are we going to get some, continuation, breakout to the upside and whatnot? 418 will be the highs of the year. So we're about $5 shy on SPY right now of the high of the year. And that was made back in about a month and a half ago or 2 months ago, February 2nd. So it's been a little over 2 months, 2.5 months, I guess. So it's not like it was that long ago, but that'll be the spot to watch on the SPY chart. So let's look at QQQ and see. It's actually red on the Qs today. So that's something to watch. Yeah, we're not seeing the same as strong of a move on QQQ. Same general idea. Still technically a higher low today compared to, Friday, but whatever. IWM a little bit stronger, although it was strong like last week at times, and then it got hammered hard on Friday, and then it's gaining that back now. So I don't know, not a ton to watch there until 180 breaks. If 180 breaks on IWM, there could be a really nice opportunity here, and I'm honestly going to put an alert there just because I want to know when that happens. I'm going to go crossing up. Boom. So that's the deal. It's kind of like an overview of what we got going on right now. What's going on? Flip is in the house. Market's pissing me off. It's low volatility, low volume. Yeah, that's kind of how it feels. Let's see what SPY's volume is looking like right now. Go to that daily chart really quick and just see. I haven't checked. Yeah, it does. I can't imagine. It actually was decent. Wednesday, Thursday, Friday, I was after CPI and whatnot last week, but today does not look like we're on pace for a great volume day. Now, of course, we're in power hour. We would ideally expect some higher volume to come in now, around now, and so this candle is going to inch higher, but it's a pretty piss poor day of volume, I think, across the board there. IWM, same deal. You know what I did see? XBI. Check out XBI today. Up 4.7%. Look at that. Beast. XBI. Now, I'd expect some resistance here. Let's be honest. I mean, you just came right back to the inflection point where once it broke down over this trend and got hit pretty hard in March, it's right back to that same spot around $82. So just keep that in mind. But very, very strong. So like we said, we're kind of speculating, like, is it a dip buy? Like, what's going to happen here on some of these things? And it looks like XBI, and to be honest, XBI is kind of, I don't want to say led the pack, but it's kind of to some degree led small caps and been a pretty decent indicator. So not that this is going to mean too much now, but if XBI starts getting back up into into here, then I think we're talking a lot more risk on, and we'll probably see a lot more risk on stuff going down if that's the case in time, right? So we'll see. But that's kind of the deal. I was looking at that today. I was like, oh, geez. XBI is killing it. IWM, XBI, XLF, the financial sector doing pretty well today. It's up 0.7%. XLP is just kind of consolidating. Luckily, I ended up taking off, I forget exactly where, but once the day we hit 75, so it goes this day right here, I pretty much took off the entire position on it that I had on the swing trade. And it worked, and that was really, but now we got this consolidation. So even though it kind of has been grinding a little bit higher lows, higher highs to some degree, option premiums, depending upon which ones you bought. I think I bought May at the time. So they were like 2 months out when I bought them. I mean, they really aren't, some decay going on, especially the consolidation. Maybe those are not really doing as well. So it's kind of good. You catch a big chunk of the move and you move on, right? That was the intention of it, and that's all I did. So we'll see. Tesla's up today. Tesla's got earnings coming up. Was that Wednesday? Is it Wednesday? Right? Not tomorrow, right? Yeah, Wednesday, 19th. So Tesla's kind of chilling right here at this. I have no expectations for Tesla right now this week until earnings has passed. So that's Wednesday after hours. So you still got like 2 days, Tuesday and Wednesday of trading on Tesla that I have essentially no interest in touching that thing at all. Apple's down 0.25%, but look at Apple's chart. Look at this thing. I think Apple, by the way, I think I got rid of this line. Let's see if I can draw this downtrend. Oh, shit. It's not perfect, but I guess I was seeing some people draw it. Well, if you draw it from, you could almost draw it this way as well. Yeah, to get yourself more touches on it. Yeah, that's just an upper wick. It's close to the downtrend line on the bigger time frames. Essentially, the bear market downtrend on Apple is like it's right around there. If you draw it to the top of that wick, going back to August, technically that's not up until like 168, 168 or so from here. So it's still got to go like $3 more. But yeah, Apple is pretty darn close, in my opinion, to something bigger. And got earnings, of course, coming out soon, but that's going to be interesting to see. on Apple. Microsoft had a decent, it was up earlier in pre, then it came down pretty hard, and then essentially it's up 0.5%, but Microsoft resistance level right now is 292 or so. Nvidia, just trying to bounce and hold this like 260s area. AMD has been the weakest by far over here. The semi sector, down 2.5% today. It was down to actually, I think 3+ at one point, but definitely way weaker on AMD, not even close. So this is coming into a spot like $88. Why? These highs, double top almost around that level. See if it's an interesting area. It's been weaker, so if you're looking for, of course, the market's kind of been rotating a little bit back and forth, but it's been something that if we get a nasty day in the market, this is probably one of the ones that would see, based off the weakness now, you probably would see it down a decent chunk, 5%, something like that. Enphase is killing it today. Enphase is up 7.68%, broke this downtrend. I'm ripping it for now. Netflix has earnings this week. Is that tomorrow? Yeah. Netflix has earnings tomorrow. Had a nice rally really throughout mid-March on, but I mean, the overall structure here, right, is higher lows. So I don't know. There's no reason to worry about this one right now. The only problem that I would say is if you have Netflix, for example, like I think my dad bought Netflix a while back, and I forget where he got it like around 210, I think was his average when he bought it. So somewhere in here, which insane. I mean, it did really, really well. He sold covered calls along the way, so he did great on it. Still has, I think, most of it. So I'm like, this earnings, of course, is a risk like anything else. But the thing is, like, you had filled this entire gap that we had on this gap down from earnings a while back, a couple months back, about a year back. There's one more to go all the way up into here. Do we think we get up to $500 again on Netflix, like in the short term? That's a lot. That's a lot. So you got to start saying to yourself, to some degree, on these stocks, like, the reason for me I say that is because, is Netflix a stock you want to invest in long term? If that's the case, fine, no big deal. You want to buy, you look for and you hope for dips like last year on Netflix. But if it's not, if you're like, hey, I'm just going to play this bounce back, or play, hey, Netflix has gotten undervalued, I think we can get some upside here, and the thing goes and returns you 50%, and you're selling covered calls, maybe making more than that, you're cash flowing it in a matter of like a year or less, there's reason to say, hey, you know what, maybe I want to take some of this off the table. And then, of course, there's a tax burden there, so you got to be careful of that. If you're doing it like an IRA, different story. And then maybe there's a better opportunity. Maybe there's a cheaper stock or better valuation stock, or maybe there's a safer stock. You know what I mean? That's brings on less risk. Or maybe, you take some money like that you do off of plays like that, and you take that and you throw it into, an S&P ETF or a dividend ETF. And then you're diversified and you get paid monthly dividends. And this way, of course, if the market drops, but the market drops, Netflix may drop 20%, whereas your S&P ETF may drop 10, and you're getting dividends. So you can at least hedge yourself or protect your downside to some degree, one would think. What do you think about Netflix earning play? The thing is, let's look at the options. I'll go pull them up. Let's go. So this is Friday. So right now Netflix is at 330. So the contracts at 330 are $15 or so, give or take, on both sides, call and put. I know it's super small, but they're around $15 a contract where it's at right now. So you would essentially need, if you buy you can play other ways, right? You can buy like a 320 put and a 340 call, those are $10 each. Still pretty expensive. If you play it like that, you are going to need to see Netflix. Let's say you just buy, the 330 calls and puts. It's going to cost you $3,000 essentially, right? $30 in contract premiums, 15 plus a 15. So it's just expensive. It's just expensive. It really is. You need to see a move. Netflix is going to need to make a massive move. It needs to make a $30 move for you to make money. $30 move for you to make money on that. That's just a lot, man, to play that. If you played it off of if you pick, I'm not a fan of picking direction. You know what I mean? Not at all, because there's no strategy in that outside of guessing. That's the way I kind of see it. So a $30 move on Netflix means that it's essentially got, and that's just to go break even on that, me go back to that other chart on TradingView. You know, Netflix is going to have to go to essentially here, which it could do, or it's going to have to go to like here or lower. That's a lot. That's a lot. That's all I'm going to say. So you need a bigger move than that. So you essentially would need it to do, you know, test/push up into the highs of the year, which it could do off of good earnings or a good reaction, or break down below March lows. If you get anything in between, you're screwed off of something like that. So that's the problem with it. That's why I'm not a huge fan of them. Especially the ones you want to do are like the earnings that no one's thinking about, or like the random stocks. Like those are the ones where you'll have better luck on the straddles or the strangles, stuff like that, playing it into earnings. But yeah. No, it's too expensive. Make a live video. I'll do stuff live. That's why we do the lives. So if there's stuff to do live today, I'm not interested because I had a Netflix. I mean, not Netflix. I had a Tesla earlier, but I'm not interested right now. Here's my Tesla trade from today. Was like, this is my level right here, pre-market high, and got there and early. And then what I saw was essentially pushed up. I did not play it there, but then it came back to VWAP, and I was like, held VWAP and bounced. I found contracts that were minimal risk, that I was able to risk a pretty small amount, and then I ended up taking it on the break here. And it came down for like 5 minutes or so, but they held the VWAP nicely. That was my stop loss, that white line. And then it got a nice push, and I didn't sell the absolute top, but I pretty much sold within 10 cents in the top. It just so happened on the contracts. The contracts I had went from like $4.50. I think I got in at $4.60 at $4.60 on the option contract for this Friday. And then it went to $5.11 and I sold at $5.10. So I guess I got a cent. I literally got a cent shy of top ticking. Now it was almost an accident. I put the order at $5.10. It just so happened that that's where it hit. And then that was it. If it missed my order and it went to $5.05 and then started to come back down, I would have just gotten back. I would have just gotten out once I saw this wick start to kind of get sold off. It just happened to rip right up to that spot. That was the only thing I did today. That was early, and that was ever since then. I honestly almost forgot that I was supposed to stream today because we usually do Monday, Wednesday, Friday for Power Hour. And then this week, I think we're going to do a Thursday night. So we're going to do Monday, Wednesday, Friday for Power Hour. Then Thursday night is the plan. I think it should be 7 o'clock Eastern time. I think is the plan for like about an hour. But yeah, I was like doing other stuff. I was working on some other stuff. I was setting some things up just now. And then I'm like, oh shit, it's 1:50 Central. I'm like, geez, it's Power Hour soon. But yeah. SPY just makes no sense today. Yeah, this is here's SPY's chart now, and you're getting really a nice push. You're up towards high of the day here. Pre-market highs up around, really you're like a couple cents shy of highs. Pre-market and this morning's highs on SPY. Nice rally to finish off the day. Again, like it's the same thing we were just talking about, was things are just kind of setting up slowly in the sense of like you just got these higher lows. Friday was kind of a fake out. It ripped up and you thought, oh my gosh, here we go. Here comes a breakout. We're going to go to 418, which was the high of February. And it got to 415 and then said, screw you, we're going down. And then pulled a push down to 410. So it dropped $5 off of that move. Now, what we, again, I don't say expect, but what you were looking for here is ideally, if this trend structure is going to continue to hold, what you're looking for is a push above 415 now, which is Friday morning's high. So into tomorrow. I don't know if I doubt it happens today, because that's, it hasn't, the range of SPY today has been from 411 to 413. It's been a $2 range. So to expect a $2 push into the next 45 minutes, I think is a little unrealistic unless there was some news that dropped. But I would imagine that tomorrow is your day for that potential opportunity if we're going to get that. Now, if we jump over and pull up what we got coming out for tomorrow, housing starts, building permits, and then a Fed speaker at 1 p.m. I mean, there's not much here to worry about, in my opinion. So if we're going to go, if the market wants to just kind of grip higher, there's not really a ton of news that's on the docket to be released tomorrow morning to do that. So it has, if it's just going to kind of keep the structure until something breaks it, that either a news piece or something like that, or something bigger happens, some developments, until then, you kind of got to assume the structure is going to continue. At least that's what I would assume. But inside of this SPY move, let's see if we can see anything else. So Qs are still red. IWM is doing really nice there on IWM. But inside of this, let's check out some stocks. So Tesla's bouncing back, but it was actually higher this morning. Apple, rounding the corner, rounding this bottom here. NVIDIA does look pretty good. Here's NVIDIA's chart. Now, you zoom out on this chart and you say, okay, overall, right, we've been trending up for the past, couple of weeks, couple months. Only concern that I have on NVIDIA is that you have these lower highs and then you have technically a lower low that was just made. So the trend right now is technically to the downside on the hourly chart when you zoom out over the past couple of weeks. The only thing is, this is a pretty interesting spot. You got there this morning with a nice little wick. Interesting spot that was respected as resistance and now potentially going to be tested again. If we break through that, maybe we're going to be back up into the 270s, somewhere up into here, who knows, fill some of this volume gap on the chart on the right-hand side. So essentially you've got lower volume in here, meaning that over the past, couple weeks, the time frame that I have selected, there hasn't been a lot of trading in this price point. Not a lot of volume has gone through in that price point from like 270 to 272. So we'll see if maybe some of that fills in this week or tomorrow or whenever that happens, if it does happen. But right now it's coming up to resistance again. It's, it looks good because you got these kind of almost dove bottom looking setup where you came down, held that pretty nicely. Then today you held a higher low. So a higher low going into that same area of resistance for the third or fourth time, the more times you test a level, the weaker that can be. And so that can provide a nice break opportunity. So that's what I would say looks like the best chart I can see out of the big large caps that I'm looking at. AMD, I don't know. From a dip buy perspective, sure, maybe, but chart looks a lot weaker compared to everything else I've been seeing. Meta, also pretty strong, but it's got, about, $3, $4 to get back up to the highs. Meta's chart, though, is really nice over the course of the past 6 months, more. Yeah, 6 months or so. Beast. Meta's been a beast. And now it's getting up into an area. I got some levels marked out on the chart, but man, if it gets above 225, up into the 235 area is the next spot that I would say is your next clean resistance zone. And then who knows if it's got more in the tank. Of course, earnings on Meta will be a pretty big wild card there, 26th of April. So that's I think that's next week coming out for Meta. Yeah, it's next week. Sit in my hands, there's something good. That's what I essentially today. Honestly, that Tesla, I was 100%. That's the only thing I did, and I was 100% ready to just take the loss if it was going to go wrong. Because I'm like, I like this setup. Here's why. I'll go to the one. I've been finding a lot of these things in the 1 hour, and so I look at the 1 hour. I'm like, okay, we got this pre-market high here. We break that. I kind of like that. It's breaking out. I got higher lows coming into this past couple of days. You got these higher lows coming in. You got a clean kind of resistance like here. You broke that. Here's a 1 hour level. Let's see if we can break that. And it did. And it provided a little something. Although I was my risk was kind of dialed in to the point where if it was not going to go, I would be out. And if this VWAP broke earlier this morning, if it just fell right back, I'd be out. No problem. And eventually it did. This massive upper wick was probably a signal to go short. Although I'm not going to short that into this past couple this uptrend. Also, after that first move, I'm like, you know what? I'm not going to push my luck. Let's just take that and move on, and then see if something else happens today. And we really didn't get anything that I was interested in the rest of the day. I'm sure some people are finding good stuff, and there's always opportunities elsewhere, but nothing that on the big names that I was a fan of today, at least. But sometimes those days, right, where you just kind of have sit on your hands, or you have that restraint to not do anything, are some of the bigger confidence building days, because at least you can say to yourself, hey, I don't have to do this all. I don't have to sit here and make decisions that I'm going to regret. I don't have to sit here and always force stuff. I have that restraint, and I know I can pull myself back if I need to. So it's not a bad thing. But yeah, SPY's looking pretty good. SPY 413.20 or 413.30 now, above high of the day. So again, like the same thing. Like, would you go long SPY right now? For me, no fucking way for me, because you had just come from low that you went from low of the day with essentially almost no red candles, like, you know, 2 red candles over the past like hour plus on the 5-minute chart to go to high of the day. Like, I mean, you gotta, how would you play that to the upside? I could not. I couldn't. I could not. VIX continues to collapse. That's going to be hurting premiums, you'd think, too, right? Jeez. Yeah, the VIX came down under 17, which is the lowest level on the VIX, I believe, since, yeah, that's the lowest level that we've seen on the VIX today since, you got to go back to January 2022. Crazy. Believe that. Look at that VIX chart, though. And like we said last night on the stream, you know, what's the plan here? What do you do? Do you go long the VIX here? Do you go short the VIX here? I can tell you, I would absolutely not short the VIX here. I'd short the VIX if it's up in, you know, here, maybe. But I would not short the VIX here. Definitely not. Although at the same time, you could go long the VIX here. Just because I'm saying I wouldn't want to go short the VIX here doesn't mean that I would necessarily want to go long either, because we could easily just bleed this thing out. Now, there'll probably be some more choppiness to that. It won't just be straight down, but there'll be some choppiness to it. But it can just bleed out. And why not go back down to 14? Why not go back down to 12? Why not even go back down sub 10? You know, why not? Like, it could. So we'll see, but that's the thing of the VIX. So the way, if you're going to go long, you know, it's a hedge. You're playing it as a hedge. You know, everyone, the problems is that everyone wants to go long the VIX once shit starts hitting the fan. So all of a sudden there's some problems that, you know, arise, and all of a sudden the market starts accelerating to the downside a little bit and whatever. And oh my God, recession. Oh shit, there's this and the dollar, and next thing you know, everyone's like, holy shit, I got to go long the VIX. But that's when the VIX is already spiked from, let's say, 20 to 28, and you're like, oh my God, I gotta go along the VIX. And that's essentially what everyone did. Not everyone. That's what people did back here in mid-March when all the banking stuff was going on. Oh my God, this is the first domino to fall. We're gonna see more. This is gonna be, you know, crazy. And then guess what? If you bought the VIX over $28, from 28 to here, you're down 40% on that. The VIX is down 40% since then. I mean, you see that happen a lot, but it's easy to get caught up in that. Very easy to get caught up in that. And think that there's more here. Here it is. Like, this is the one. This is it. And then it just bleeds you out. But yeah, the VIX is a great contrarian trader. So if you like playing the contrarian side, and you like playing when things are too good or things are quiet, and you want to start positioning for the other side of things, VIX is good to play. VIX looks like no man's land. Yeah, you would look at this and say, hey, like, this is a good time to start buying the VIX. Yes, I would agree, based off previous history, that it is a good time to buy the VIX, and you are getting a decent time, or getting a decent deal. Only thing is, right, market could do whatever it wants to do for the next 2 months, and VIX could go to 14, 13. So if it does, you know, that's not a big deal if you're hedging yourself. But if you're going to go all in, or you're going to go in heavy, right, which a lot of people like to do, because that's, you know, oh, got to risk it for the biscuit, right? You got to make money. You got to risk money and take the big risks to make money. Fair enough, but you can do that with risk management in place. So in a long portfolio, a longer term portfolio, you know, a little VIX exposure, not a bad thing, right? If you're all long, right? When things are good, you're feeling good, but maybe you want to grab a little bit of a VIX hedge. So there's a bunch of stuff I was looking at. Let's see, where's my VIX? Oh yeah, I have a list of short the VIX. I wouldn't play these now. But yeah, SVXY, this thing, new high there. Well, not new high, but almost back to COVID, pre-COVID levels on SVXY. Crazy enough, I can believe that. SVIX has only been around for about a year or so, but that's getting back up to essentially its highs. What you'd want to look for now is let's look at a VIX ETF list, because there's a bunch of cool ones you can find. So I would highly caution against, you know, like a UVXY because of the leverage there, and because if you look at UVXY, right, this is getting just annihilated. Like, yes, it will do better on a percentage scale if we get a VIX spike. Like it did the spike in March. It spiked about 65%, whereas the VIX, what did the VIX spike in March? It spiked, oh no, it spiked a very similar amount, 60-something%. So honestly, the only problem with UVXY is that on the downside, if the VIX just kind of consolidates or bleeds, you're getting bled out nasty. VXX, is VXX a better option? How much is the VIX down today? The VIX is down 0.59%, so VXX, this is getting hit pretty hard too. Yeah, it's getting destroyed. This is down 3.5. A lot of these leverage, these VIX leverage ETFs are tough. VIXY, SVOL, there's a ton of VIX. There's a ton of volatility ETFs. I recommend you just check some of these things out because they could be cool to look at. We were looking at SVOL last night. Essentially, it's a great way to short the VIX and get paid a fat dividend in the process. But I mean, now is not the time for that, in my opinion, unless you're in already. But now is not the best time. Yeah, a lot of these things are a little sketch, right? Well, these are not bad times to look at them as hedges, but the problem is the leverage. UVIX, 2x long VIX futures. Let's look at UVIX. So UVIX, if you want a little bit less, well, not a little bit less, this is going to give you that leverage, like a ton of leverage on that. So like if you, like this thing, let's see what it did back in March. UVIX did from low to high about 100%, just shy of 100% back in March. So if you timed it, somewhat close or somewhat right, you could nail it on UVIX. The only problem is that if you don't time it, because of the leverage, this is going to bleed out substantially heavier. So keep it on the list. Like I might add this one to, yeah, I'm going to make a new list here. I don't want to put it in here. Let's make a new, create a new list. Let's go long. Let's go long VIX list. Oh shoot, I want UVIX. Create a new list. Let's call it long VIX. And then I'm going to toss in UVIX in here. Add to the long VIX. Just because that's a good one if you like playing a little bit of leverage. Now, of course, leverage can hurt you a ton. But if you like playing leverage trade, the only problem, again, like look at this. This is example. If you were looking at this and you were just kind of averaging into this, like once it was kind of in free fall mode, like we eventually got 100% move on UVIX from essentially like early March to mid March. Like you got that move from 15 to 30 almost, right? The problem is if you were just kind of averaging into it like this entire way down, or let's say you started buying it here at 30 and then you bought some more at 22 and then you bought some more at 17, your average is somewhere in here. Yeah, maybe you can come out in the green, but it's not going to be as big of a gain as you think. So that's where the timing is honestly really important on these leverage ETFs. And that's why I'm not a huge fan of that right now, because again, like you could eventually get 100% move or more on this thing, but it might just come, like what if it comes from $7 to 14, but you start buying at 12, what's the risk reward? You're really going to want to risk yourself, whatever that number is. What is that? Like risk 40% to make 20? That's not the best risk reward. So I don't know. Something to think about. But I like looking at those ETF lists because they're kind of cool. When we jump back and forth, where is my main list? SPY's ripping here, man. Pushing highs into the close. Let me adjust. Yeah. Kyle's in the house. SPY's make me feel mopey and tired. It's how it tends to do. That's what it tends to do. And then the thing is, SPY's going to give you you're going to get a period, or whether it's a day or 2 or 3, that are going to be insane for maybe no reason at all. And it's going to come when you least expect it. And kind of like this rally. This rally this afternoon kind of came when no one expected. Like you're just kind of stair-stepping down, and then we get this rally from 411 to 413.50, which is not that insane of a rally percentage-wise. What is that? 0.6. It's not a percent yet. Maybe you'll get there, but 30 minutes to go, another 0.4, which is a lot. Yeah, I mean, I think the biggest thing to look at here is this. Here's the SPY weekly chart. Break this high and break that high, and then we can talk. But the concern that I was looking at, and I was looking at a bunch of things this weekend, I was like, the concern about that break, right, is that, like we've been saying, is that we've got this pattern of like these higher highs and higher lows, but the recent higher high only overshot the one before. Like we had a 410 high right here. This one went to 418, right? So if we are going to make a higher high, but continue this and like do like one of these pullbacks, and the trend just kind of continues for a while and chops around, not really chops around, but just kind of builds higher lows like slowly over time, which is more of like an investing market, less of a trading market, because there's not there's a little bit less volatility, which we're seeing the VIX getting crushed. If that's going to happen, then we can't really expect SPY to go from 418 if it breaks to 450, you know what I mean? Whatever the number is, even 430, like even these highs, I don't know. I'd be somewhat skeptical of a push to that level, at least without a pullback, based off the pattern we have. Although it could break that pattern and all of a sudden give us, what we ultimately want is a better range. So we'll see. But that's the next spot to keep in mind, though. So around 432 or 431, 432. If it breaks 418, that's $12 higher. We had a push of $8 off the previous highs from 410 to that high. Then you pull back from 418 down to 380, and then you go to maybe 425. I don't know, somewhere in there before maybe a pullback. If that's the trajectory, and that's the same plan what we're going with now. All an idea. Okay, 10-year. She's just playing this. I'm going to go to the daily chart here. She's just playing in this little range. So the 10-year is bouncing nicely up. Check this out too. We were talking about the Fed hikes and whatnot. The Fed is essentially, or the market is essentially dialed in the Fed to where they believe there is now a 13.9% chance that they are going to do nothing at the next meeting, and a 86.1% chance that they're hiking 25. So it looks like, and this is always pretty good, this is like pretty darn accurate, it looks like all indicators right now point towards, or this indicator points towards the Fed doing a hike, and May is the last one. And that's on May 3rd. So we still got about, a little over 2 weeks until then. But May 3rd is the next Fed meeting. And then if we go out to June, highest probability for June is that we're going to be sitting at, only 25 basis points higher from where we are right now. Still a decent chance that we're going to be 50 basis points higher than where we are now, which would indicate maybe 225s, 23% chance of that versus a 10% chance of nothing from here, or a 1 and then a backtrack, a 25 hike and then a backtrack of 25, which would be, I think, unlikely, right? Because if the Fed's going to, unless something happens, they're going to hike. Why would they hike 25 only to cut 25, a month later? I doubt that's what the case is going to be. Unless, again, something happened to where they were like, holy shit, we got to cut. Let me make a side other channel in Discord. Yeah, I will do that. I will do that. Reselling printer ink. That's pretty cool. That's something you wouldn't think of. That's what you got to find. You got to find the little niche thing that no one thinks about, or that's not really competitive. Here's the dollar. So check out the dollar here. We are trending to the downside, obviously, these lower highs, but a nice little bounce off of these lows. The dollar is funny because not panic, but everyone was kind of freaking out about the dollar is going plummeting and all this stuff a few weeks back. What the dollar has done is it's trending. It's been trending now. Like the bigger move to the downside is already, like we saw a pretty big move already. This one is like just kind of slow and steady, you know? And even though it's bouncing. James, if they go at 25, I get a feeling this could be the last hike. I would think so too. If a 25 goes down this next meeting, I would imagine it's the last one. Which, I don't know. I'm kind of interested to see what the bond market's about to do here. If the 10-year is going to push back up towards 3.8, 3.9, that would be pretty impressive. I would be pretty surprised by that if it got up into this area. Although that would still just kind of be in trend, right, with the lower highs or lower lows and lower highs, right? Until it breaks that. If it broke out of it, then I'd be very surprised. I would be somewhat surprised if it got back up and tested the top of that range. But we'll see. We will see. Again, I think that the best way, in my honest opinion, about hedging for, like, if you're scared for the recession and the Fed over tightening and all that stuff, the best way to hedge for it is, I think, bonds. I think if we see a bad recession, what is the Fed going to do? They're going to cut rates. So if that's what happens, then that's your hedge versus trying to buy SPY puts or playing it that way, because playing it by shorting the market, if we get a bad recession, yeah, it's sure we could go down. But what happens if we rip higher in the near term before we get a bad recession? I don't know. So it could be more of a challenge, I would say, to play that. I guess you can say the same thing about bonds too, but I think there's a little more volatility, I would say, potential volatility in the stock market versus maybe what the bond market could offer. I don't know. Use the social fund offer up. I've never actually used. I gotta tell you guys, like I got technically my dad banned from eBay when I was a kid, when I was in high school, because I guess I was too young to have an eBay account. I'll go back to SPY here. So I was too young to have an eBay account. I think I was under 18 at the time. And so what I was doing was I was reselling jerseys from China, like NFL jerseys. The thing is, I was not marketing them as they were real. Like, obviously these were not like official NFL merchandise, but it was like, I was like, hey, this is a jersey of this player, and for $50 you can get it, because I was getting them for 25 at the time. And then I made this accidental purchase where I bought a bunch more than I intended to. So it kind of started as almost an accident. And then I was like, oh, this could kind of work. And so I bought more than I was intending to. And then I was like, well, I got to sell them. So I started putting them up on eBay. And because I wanted one for myself or whatever at the time, or my brothers or whatever, we bought a bunch in bulk. We're like, hey, for $100 we can get 4 jerseys. Let's go get 4 jerseys, And then I put it on eBay, and then eBay comes back and they go, well, you're selling illegal merchandise or whatever. These items are, whatever they were. They're fake. They're not real items. Whatever their terminology was at the time, and they're like, we're banning your account. Like, we are banning your account. And they're like this. And then, I've called them up and whatever. They're like, no, this is not something we can reverse. 10 years later, I went back because my dad's like, yeah, I can't fucking use eBay, you fucking asshole. And I'm like, sorry, my bad. And I called again, and they're like, no, this is an irreversible thing. Like, once you are banned, like, you are banned for life. We cannot appeal. Like, this cannot be appealed. Like, you are done. So I'm like, yeah, unfortunately, he can no longer sell on eBay. And I don't know, to be honest, how strict that really is, because we've moved. I've made an account, and I thought, like, when I was looking this up and back in the time, it was like, if anyone associated with this person makes an account, they'll also ban you. I have been able to sell not a lot of things, like random stuff here and there on my account, but my dad is banned. His name is literally banned. He cannot make an eBay account, and he cannot have an eBay seller account. So that's a shame. But from what I was seeing back, because I was kind of getting into that stuff, the fees as of late are insane. It's tough to turn a profit on things like that. It really is, because the fees are so much that, like, you got to be crushing it on your margins for you to be turning a profit after all the fees. So I don't know what the workaround is for that type of stuff. Big fan of eBay. Sales are a lot slower. People respect the prices there. Okay, cool. Mercari. It happened on Mercari. Yeah. Electronic repair skills. Yeah, it's somewhat popular of a niche almost, I guess. But if you're good and there's a market, that's like the thing. You got to kind of do the research to figure out what the market's like. Yeah, got to find the niche. So the question is going to be for the rest of this week. Well, here's the 1 hour chart. I think the 1 hour chart's a little cleaner to look at, to be honest. Are we going to pierce through this? And are we going to get the 418 test? Are we going to get the high of the year test? We're only a couple bucks away. We can totally do it. That is the question. The big thing now is the speaking of side hustles, the big thing now I think is a lot of people are getting into is the Amazon influencer program. I'm not sure how easy it is to get in from like just an average person's perspective, but if you have an account on it, no, it's different than what you think. It's not just like, oh yeah, refer an Amazon product and get 10% commission or a 5 or 2% commission. No. They have the ability to do reviews. So you can make video reviews or just videos on certain products and tag the products. And then if someone watches your video and then goes and buys the product, you're going to get that 2% commission or whatever the commission is for that type of product. The thing is, you don't need to drive traffic. Amazon gets the traffic for you. So like if your video is good or whatever their classification is to put it on the page, on the review page, of the Amazon listing, like if your video's on there, you will get some traffic. You'll get people to watch your video. And then the only problem that I would see with that program is, first off, how selective is it? Second, I've seen some pretty fucking bad reviews. I mean, you go on in someone's account and it's like you go look at a video of I don't know, like a Yeti, and you see a video and they're like, this is great, buy it. Like I've seen stuff like that. And I'm like, what the, who is doing, like who is even allowing that to get through? But I've seen it go through. So, the problem is that there could be, if they allow too many people to do it, you're going to get shitty quality if they don't police it very well. And then you got, all this competition for like, some of the hottest real estate, I guess, or for only, there's a ton of items and there's so much stuff on Amazon, but I don't know. That's a pretty hot thing that I've been seeing a lot of now. But yeah. All these people have done. Oh, people have done much worse. People have done so much worse for money, right? So you think like getting banned from eBay from like whatever stupid thing. And the thing is, I was like, I made it very clear. I guess they just don't allow those items, which is just a rule. The rule is the rule. But I remember making it very, very clear back in the day, like, I didn't say this is not an official, whatever, but I like never said that it, like, I didn't say that it was official. I also didn't say that it wasn't. Like if I wrote that it wasn't, I feel like that would hurt sales. So I wasn't going to say that, but I also didn't say that it was officially licensed or whatever. It wasn't like an official NFL thing. It was just a jersey of a player that maybe you like. A lot of YouTubers talk about it. How much should be higher? Well, I mean, I have done it, the Amazon influencer thing, because I had gotten approved a while back for it, and it does very, very for what it is. Like, to be completely honest, it's pretty freaking good. Like, it's extremely passive outside of making the reviews, and I'm just not, I can't really gauge it just yet, to be honest, because I don't know how, I've only been doing it for this year, like 2023. So I have no idea how the longevity of the numbers will be, but we'll see. I mean, it makes, I don't want to say great money because it's not making thousands and thousands of dollars, like, a month. But for what it is and for the amount of work and what's required, it's like, this is pretty cool. That's all I want to say. Okay, so then let's go back to this stuff here. So Wednesday, what's the Fed beige book? What does that even mean? I have no idea what that even is. I feel like that's the first time I've seen that pop on the thing. Published 8 times per year. Each Federal Reserve Bank gathers anecdotal information on current economic conditions in its district. The reports from the bank and the branch. Okay. So you would think that the Fed beige book that's going to be interesting. Okay, so that might be more than people think here. So get ready on Wednesday when they drop this at 2 p.m. So there's only going to be like 2 hours left in the day. But we'll be on the live. We'll be on the live for this. So we'll see how this is going to go on Wednesday. So we'll kind of get a good gauge for what the Fed beige book reaction is going to be. Not that I'm expecting much out of that, but that's coming out on Tuesday or Wednesday at 2 p.m. And then you've got Tesla earnings after that. I believe Netflix as well. Or is Netflix? I forget. Was Netflix on Tuesday? Netflix tomorrow. Netflix earnings is tomorrow. Cool. So yeah, Netflix earnings tomorrow. Then you got the Fed, like in terms of, bigger events. Then you got the Fed beige book Wednesday at 2 p.m. Then at like 4 p.m. Wednesday Eastern. These are all Eastern time. And then you got 4 p.m. Wednesday, you got Tesla earnings. And then Thursday, let's go with leading economic indicators, home sales, Fed manufacturing, jobless claims. And then we got some midday Fed speakers. So the week will start to heat up as we get going here. Right now it's kind of quiet, it feels like. But it will heat up. It will be heating up. 2-for-1 toe picks. Oh my God. Volume profile indicating light buying on these levels. Doesn't mean it has to go down. It shows a lot of resistance. Let's see. Let's go back to that SPY chart and see how that volume has come in for today too. Go to the daily chart on this thing. So for today, yeah, I mean volume right now. So on just kind of gauge, Friday's volume was 78 million on SPY. Today we're at 49, almost 50 million, and we got 10 minutes to go. Now the last 10 minutes will be the highest volume of the day. So just like that, 5 million shares just went through, and as I was saying that. So yeah, the volume is coming in now, but you're gonna have to make a pretty big push in the next 10 minutes, 9 minutes now roughly, to get SPY to tie Friday's volume. But it may actually eclipse Tuesday of last week's volume, which was only 59 million shares. So maybe looking at 59 million shares, something like that could be in the cards. But maybe I said that at the let's jump back here. I said that at the 10-minute mark, and let me see that little 10-minute imbalance. So yeah, high of the day is 413, like 55 roughly. We're 10 cents shy of high of the day. If you look back, the highs of Friday, 415, like give or take a couple cents. So 415 will be the spot to watch if we get up there tomorrow. Not much to watch. Yeah, in terms of that SPY, here's the 5 minute. That there's that volume, high volume. Above this, there's not much, right? There's not too much up here. So it's trying to push through this level now, but a bunch of highs, over the past couple of days have been right up around this area. So we're right up into that spot. Maybe overnight you get a nice push. If you look at the 1 hour chart, let me go to futures, and just because futures will kind of blend some of those lines a bit. Here's futures, my futures chart on, look at the micros, but yeah, we're close. The only concern about that is that, this breakthrough of this like 41.75 area, we are coming on a massive rip. I would like to see for a futures trade, if I was, let's say, to take this overnight, put a stop loss of like 5 or 6 points and a target of 10 plus points, 2-to-1 risk reward. But, ideally, I would want to see it kind of just chill here for a little bit and then eventually break through. versus just, pull back a little bit here, maybe pull back a little bit, then push up and then go through versus just go right through right now. So not interesting if it goes right through right now, because that's just sketching me out in the past couple of weeks. Those have not been high probability setups, but it's right up at resistance right now from a futures perspective right now. So we'll watch that into the close. There's the morning, the morning dump and the afternoon recovery. Yeah, happened again. It kind of maybe took a different spin on that, right? If you go back to that SPY here. Well, no, I mean, same thing, man. I mean, very similar to Friday. Had that kind of happen here on, well, if you go back to Thursday, it was kind of a rally all day. Similar thing happened on Wednesday, Monday. It's happened a bunch. Look at that, they're ripping through now on SPY. Volume is probably getting up there too on this. Let's go to the daily chart again. Still got about 7 minutes to go. Volume now on SPY is it's still 55 million. Hasn't really been pushing up a ton. See if we get a bigger push in the next few minutes. But yeah, what it's got is it's got these higher lows pretty cleanly. Here's the daily chart. Very nice higher lows, just doing its thing. Just doing its thing. Higher lows, higher lows, higher lows. So ultimately, either this is going to set us up for a nice rip through and break out to new highs on the year, or we're about to unravel. And if we unravel, those higher lows break down, we could get a nice downside play. I think back down into the 390s, mid 390s. But of course, that's, I feel like that's what a lot of people think. We'll see. Strange area it bounced. Yeah, it just literally bounced at a higher low. That's all it really did. Here's the hourly again, It's not like it came down to 410, it came down to 411. Not a ton. I mean, there's a little bit of higher volume like right here, I guess, but not a ton of stuff to give me oh, this is a really clean area to play as a risk, or this is a really good spot to watch for risk. That morning dip and then afternoon rip, it's been good. The only problem is that, you got to have maybe some sort of signal, right? So if you go the 5-minute chart, was there anything because you came down and you thought maybe we would start to kind of grind up here after we had these lows all hold. Then it gave you a gut check, came back, went to new lows, and then people probably thought, oh shit, I'm going to short this thing. We're under low of the day. I'm going to go short here. We're going to dump. And then it just said, screw you, we're going up. And it ripped massively to the upside. So the fuckery, Downside would be healthy. It would. It would. I am in the camp, though, that I would love to see a massive squeeze out and then sell everything and then chill. That's what I would want to see. I feel like that's not going to happen, but I would love to see a massive squeeze out, sell anything long term, and then just sit on cash and then hold bonds. And then just be like, okay, I got my recession protection in, and that's it. See you guys in a couple months. Now, that's when I think at that point I'll be focusing in on the short-term stuff and, less exposure to longer-term holdings. Targeting 410. Yeah, I thought that would have been a reasonable spot, right? Today it would have been 410, would have been a reasonable spot, 100%. Just didn't do it. Just didn't get us, literally just gave us the higher low. That's all it did. Let's check out that fear and greed, how this is shaking out. Where are we at here? 69, look at that, nice, beautiful. Fear and greed, 69. So again, what does this tell us, right? We're getting up there. Maybe this sets up, and by the end of this week, if we were to rally and make a new high on the year, and I don't know, and maybe we got up into, let's say, somewhere up in here, and fear and greed extends into, geez, these freaking ads, extends into extreme, which we're not that far off from. Now that's a spot to say, hey, maybe the VIX starts looking pretty good here. Maybe the hedges start looking decent versus, I would probably put on a hedge, an additional hedge exposure, in my Robinhood account, whether that would be a 3x ETF or it would be, a couple month output, just to kind of hedge myself in case on like a SPY, simple SPY put. out a few months. The only problem is, expense there. And so that's why the 3x ETF might make a little more sense. Just have to, just ties up a little more cash. So, I'd go into more margin for that because that's what I'll be using it. I'm going into margin to do that. So, does the amount I would spend on margin make sense / whatever. That's the consideration I'd have to think about. If we get into extreme greed here, I would want to see the AAII sentiment survey ideally. And then if that came in pretty bullish, I would feel pretty confident, not pretty confident, I would feel much better about not locking, but just adding into a little bit of a hedge just so that, hey, if the market does end up dumping and, your long-term or your, all your longs in your portfolio get hit pretty hard, what you can then just do is just take off your hedge, take your X number of dollars. Let's say you hedge with, $100 and you make 40. Okay, great. Take that 40 and then you can buy, that's 40 you didn't have. You can buy those other longer term stuff, buy the dividend ETFs and whatever, buy it cheaper. And then you get more exposure there. And then you can just kind of rinse and repeat. It's kind of how I'd go about it. In that case, how much you're going to pay on margin for that. And that's the whole deal you got to calculate. But if you do the math and it's like, okay, it's going to cost me, $100 in margin, fees and whatnot, if I'm going to hold this for 3 months or whatever at the max peak or that's the time frame. Okay. And if this happens, I'd make this much, okay, does it make sense? It's all, risk reward. It's all somewhat of a calculated play. But the only problem would be, if you're spending a ton of money on margin these days, right? Because rates are a little higher and stuff. And then, you get screwed and the market chops and then your option goes to zero. It's where things get tough. That's why 3x ETFs might make a little more sense, which is probably where I would lean. But I'd probably have to sell something else, a little bit of something else before I did that. We say the only thing. Yeah, I would be fat long TMF and then all cash. If the market, if SPY was like going like this, if SPY does this year, in the next couple months, I would be all long. I would just be long TMF and then I'd be cash. Like that's it. I wouldn't go all cash like in one day. I would just, progressively, the higher we go, just sell more and more and more and more of my long exposure. The last thing I would sell would be, JEPI. That would be the last ticker to sell. That's the dividend play. But, Tesla will be gone. Soxel I would have was my long. I'd be gone and that'll be done. Maybe the AGQ. I don't know how silver would be. It depends on how silver does during this span, how the dollar looks. Maybe I'd sell that too. And then I just essentially would hold TMF and that would be it. And then reconsider, wait for the market to kind of, figure itself out or do whatever. And then, make the next move off of that, right? So SPY end up here. Let's check out that daily chart. What do we get on volume? So we finished the day with about 56 million shares traded, which is the lowest volume we have seen on SPY since looks like you got to go back to like Christmas time. Jeez. Yeah, 51 million shares back then. We had a 60. No, yeah. Since December 27th, the lowest volume day on SPY since December 27th. Let's look at SPX. SPX, not as clear. This actually, the S&P had 2 billion volume here. We actually had a lower volume day just on Monday of last week. So if that's one thing to look at too. Like everyone looks at SPY, but then go look at SPX, look at the NASDAQ, look at NDQ, like look at a bunch of different things because it's not as perfect sometimes. When you look at other things, when it comes to that volume, look at QQQ and volume. Yeah, they were low volume day, like just lower volume day. It wasn't a high volume day by any means, but we'll see. Still have my 2024 hedge until something invalidates my downside belief. Jack X coming back a little bit. You know what did pretty well today? Yeah, I had some good volume there on JAGX. Let's go back and check out some of the top gainers on the small cap side of things. Dude, this thing was up 160+% today. CFRX, 150%. BLCM, 100%. There's some good stuff going on in small cap land here. Interesting. WISA, remember the stock? Had a nice little perk today. Man, small cap land is not dead completely. Some action there. Some. So what is this? Tesla. I pulled up, yeah. Yeah. Man, other than that, Tesla traded this morning. That was it on my end. But all right, guys. With that said, I'm gonna wrap things up here. We finished the day at around just shy of 414 on SPY. Not bad. Not a bad day if you think about it from a rally perspective there. So things did turn back up, whether you like it or not. The only thing that I would say that would be, I don't want to say concerning, but the only thing that was more eyebrow raising is the 10-year. 10-year is pretty strong, and I guess it's because we're expecting now. We looked at the projections for the next Fed meeting. It looks like that's going to be a 25 basis point hike. Looks like that's where the consensus is going to be going into the next 2 weeks. So we'll see. The biggest things to watch for tomorrow is not much. Housing starts in the morning. I mean, who cares? Fed speaker at 1 p.m., so just be careful around then. And then it's going to be Wednesday. So tomorrow afternoon is Netflix earnings. That's going to move the market a ton, but it could be interesting to see how that kind of shakes out. One of the first, large caps that has been pretty volatile this past year. And then Wednesday, you get the Fed beige book, and then a Fed president at night, but who cares about that? That's not until nighttime. Fed beige book is going to be interesting to see. Gives you some insight into their current policy and whatnot. Not a big thing, but it's something to watch at 2 p.m. And then on top of that, we got Tesla on Wednesday afternoon. And then Thursday, jobless claims and the whole deal there should be a pretty exciting day, you'd think, on Thursday. So it should pick up as the week goes on. But that said, thanks so much for watching. Thumbs up button on the way out. I will see you guys in the next one. Stay tuned. We're going to go Monday, Wednesday, Friday, power hour streams, last hour of the session, and then Thursday night, 7 p.m. Eastern time, we'll do a stream as well. That is the plan for this week, and I'll see you guys in the next one. Peace.